Okay, in this video, let's talk about how an understanding of cost behaviors can help us analyze the financial performance of our business. Costs are typically classified as either fixed or variable. Variable costs, things like salary and rent and insurance, stay the same regardless of how much business activity you have. So let's look at a simple example of a coffee shop at two different levels of activity, 5,000 cups a month versus 10,000 cups of coffee a month. Regardless of how many cups of coffee we sell, our salaries for the month are the same for all of the different personnel, and our insurance is the same. So fixed costs stay the same regardless of the level of business activity. On the other hand, variable costs are those costs that go up and down depending on how much activity you have. So for example, in the coffee shop, we have to buy coffee, we have to buy cups, and so let's assume the coffee is 70 cents per cup our cost, and the cup cost us 4 cents a piece. So our total cost for each cup that we sell would be 74 cents. So if we sell 5,000 cups of coffee, our cost would be 3,700. If we double that to 10,000 cups, our total cost for the coffee and the cups would be 7,400. We may also have some costs that are mixed. In other words, they have a fixed component and also a variable component. For example, if you rent commercial space, you might have a fixed cost per month plus a little bit depending on how much your sales are. So let's assume the coffee shop is paying $2,500 a month plus 2 cents for every cup of coffee. So at 5,000 cups, we have $2,600 total rent, and at 10,000 cups, it goes up to $2,700. So let's look at an income statement that combines all of this information together. Our total sales, based on a sales price, let's assume of $4 a cup, would be $20,000 if we sell 5,000 cups and $40,000 if we sell 10,000 cups. Next, we're going to subtract our variable cost per unit, which is 76 cents per cup. That's for the coffee, the cup, and that variable component of the rent. So here's the total cost at 5,000 and 10,000. If you subtract the variable cost per unit from the sales price, that gives us what we call our contribution margin per unit. That means that every cup of coffee is contributing $3.24 to help us pay our fixed cost, and then after that, that would be a contribution to profit. So our total contribution margin depends on how many cups of coffee we sell. We would then subtract the fixed cost, and we can see that our net income is actually a loss at 5,000 cups, and then it turns into a profit of 8,400 if we sell 10,000 cups. So somewhere between 5 and 10,000 cups is our break-even point. Let's look at how we would figure out what that is. If you take your fixed cost, which is $24,000, and divide by the contribution margin per unit, that would tell us how many cups of coffee we have to sell in order to break even. In this case, 7,407 cups. If we plug that into our income statement, we can see that, yes, that brings our profit to exactly zero. That's our break-even point where our total sales equals our total cost. In part 2 of this discussion, we'll look a little deeper into how to use our understanding of cost behaviors to analyze the performance of the business.